Hi everybody, hopefully you can hear me all right. Loud and clear, jolly good. Excellent, there we go. Hold on one moment, hold on a moment. I was just letting Anna know that I've answered the questions on the chat. Anna, I will go on to the futures in a moment. I've got the futures running as well, so I've flip-flopped between the two anyway, but I'll pull that up in a moment. Just picking up on the pound Aussie, really spoiled for choice. I was conflicted between the euro and the pound, but glad I've gone with the pound because that's moving the most strongly. You can see it here on the, I think we got the 5 minute. Yeah, I got the 5 minute here. 5 minute CSI. This is the heavy selling on the pound. Yellow lines, that's falling very strongly. Really nice trade developed, and equally strong buying of the Aussie, which is, I'll just pull that over there. We're going to see the whole thing now. For those of you who come along regularly, you'll always know I'm looking at the extremes. So I was eyeing up the New Zealand or the Aussie is very strongly oversold. The New Zealand's been taking a battering, certainly in the faster timeframes, at any rate. And of course, up at the top, I'm looking at the pound, particularly as we're coming into the London Open. Always looking for opportunities. So that was fairly obvious to take a punt on that one. Keep an eye on that one. As I say, I'm always looking at the extremes because I want to get in early. Traders now joining this move. Clearly, there's some way to go on the 5 minute at any rate. And what we're always looking for is this these opposing forces, the opposing force of buying, counterbalanced by the opposing strength of selling. Because when you see that, you will see the strongest trend develop. And that's why we will start with the CSI, because the currency strength indicator gives us all that information. It gives you visuals on which currency pairs to consider. It also tells you which currency pairs not to consider, because I can tell you right now, if you looked at a pound euro chart, both of them falling, so there's not much going on there in terms of a trend. Equally, in terms of pairs rising, you've got dollar rising with the yen, rising with the Aussie, rising with the CAD, rising with the Swiss franc. So not much going on in terms of any of those particular pairs right now. So it's a question of teasing apart what it is you're going to trade and what is actually going to deliver some real momentum. Now, as I said earlier, I'm always looking at the tops and bottoms. I'm always looking for overbought, oversold state because I like to get in early and I'm greedy. And I also like to trade short side if I can. If I can't, and it's something that on the futures you can invert. Obviously, the currency futures there are inverted against the dollar, so there's a lot more opportunities if you can't find it on a spot market. But that's beside the point. Markets always fall faster than they ever rise. Generally speaking, it's not always true, but generally that is the case, and that's why if you analyse all my trades over the 20 odd years, you'd find that the vast bulk of them is the short side. But what you're always looking for is this strength and weakness which will deliver the trend, and you can see it here on the pound Aussie clearly. If we just hop over onto the multiple CSIs and just see where we are. There we go. This is on 1 minute, this is on 5 minute, this is on 10 minute, and this is on 15 minute. And what this isolates and highlights is really the context of time and what it is you're trying to achieve in your particular trading opportunity. Because what you're seeing right now over on 1 minute, you're seeing the pound very oversold and the Aussie very overbought. And you're starting to see that reverse. Now, if you're over here on the 15-minute time horizon, or indeed even on the 10-minute time horizon, the perspective at the moment is one where there's some distance to go. And even on the 5 minute, we've had the cross, but the Aussie, if it's going to go all the way up to the top, has still got some distance to travel, as indeed has the pound all the way down to the bottom. The same is true on 10 and certainly over on 15. And if you're a 15-minute trader, maybe looking at a 30-minute time horizon, excuse me, then what is going on down here will merely appear as a pullback, a pause point, a reversal. And you may well indeed see the pound go all the way back up to the top and the Aussie move all the way back down to the bottom in a 1 minute time frame, or even on a 15 or 30-second time frame, where those traders will actually be quite happily trading that in the opposite direction to the one that you're trading. Because your perspective is different. Your perspective over here is of a much lower time horizon, and you are prepared for the fact that what you're seeing over here on the 1 minute time frame is really just a pause point over here on 15 in terms of a reversal or pullback. As Anna said, markets never go up and down in a straight line. You can't expect them to, they never will. They'll always pause and reverse. And those are the points at which you get the emotional trigger of taking any profit off the table. Because if you got into this early on the reversal up at the top here somewhere, and you're now seeing this pause coming into effect, you're seeing this slight reversal in the Aussie here, and you're seeing some slight pause in the selling of the pound down here, your emotional response will be to close out that position, take your profit off the table, and head for the hills, which is perfectly natural. The problem is that if you do that all the time, what you will end up with is a series of small losses and a series of small profits. And that's the problem. And that's one of the reasons we develop many of these indicators, and in particular the trend-based indicators, the trend monitor, for example, we're using it in multiple timeframes to help to keep you in. And multiple timeframes applies not only to charts, it also applies to indicators, because it will give you that information about whether this change here that you're starting to see develop in terms of the Aussie kinking over doesn't look terribly strong, because it's sort of flatlining, it's oscillating around. It doesn't look particularly strong in terms of the development of selling of the Aussie on this particular time horizon. The same is true of also as the pound. But if this were to develop, then what you would see is you would start to see it appear on the 5-minute, through to the 10-minute, and ultimately on to the 15-minute. And that is just a fact of life, and it's about maintaining a position in the market through all the pullbacks and the inevitable reversals which happen in every single time frame. So if we go back to here, what are we seeing at the moment? If you go down to the 15-second chart, there we go. What we actually have been witnessing is that little sort of reversal here, but this is on a 15-second chart. So if you're on a 5-minute or a 10-minute or a 15-minute, you know, it's of really no consequence. What is of consequence, of course, on the slower time frames is when we go down to, let's say, the 5-minute. The fact we've got a volatility trigger on this particular candle. So we know for a fact the market makers are in here. Big candle, lots of volume, volatility triggered. What are we expecting? Well, at the very least, we're expecting some congestion, which is now building. In other words, we're going to trade inside the spread of that candle. In addition to that, we're also trading around the volume point of control. So, you know, there's two reasons to expect congestion, if you like. The trend monitor here, you can see has transitioned through into bright red, which is fine if we short the market. And the positive aspect of that particular chart from a short viewpoint is that the volume point of control, or the volume histogram rather, is now falling away dramatically. We've now got a low volume node in down here. We've got very much reduced volume in this region. So if we break below the bottom of the volatility candle, roughly around, where are we, 65, 66, something like that, the market should continue lower more freely. In other words, there's very little on this chart to suggest that the market is going to pause further once it gets below this level, because the volume here is so light, and it acts, excuse me a moment, just gonna switch off. Sorry, I had a frog in my throat. It acts in exactly the same way as price-based support and resistance. So where you have a market approaching a level of price-based support and resistance, then that's what you expect. You expect some pause point. The price action is going to run into some difficulties, a headwind, if you like. And the same is true here. Volume can be considered in exactly the same way. If you've got a market coming down into this region, you've got heavy volume here, you know, it's going to take more effort to drive through there than it will to move through this region, because the volume here is pretty light. In other words, there's very little in the way of older orders sitting there, pending orders, etc., traders trapped in weak positions, whatever it may be. There's very little in the way of volume here. So there's very little to cause this market to pause. So as you can see, we've had a nice widespread down candle, moved away through the bottom of that particular candle, nice volume on that candle. So, you know, here, this is just regulation, price and volume in agreement. There's no wicks of any note to the top or bottom. So in terms of that particular candle and that particular volume, bear in mind that this is 8 o'clock London time. So in terms of comparative volume, we're comparing here This is through the European session, so volume here from 7 o'clock to 8 o'clock, we can compare volume in here. We're now comparing volume here in the London session, so on this particular time frame, we're comparing this volume here. So this looks fine. No particular buying on that particular candle to speak of, and on we go. So we should expect as a trader that this is going to move through down here relatively quickly, all things being equal. You then look at what's going on in terms of the other charts, see if there's anything we can pick up. Let's have a look at the 3-minute here. Similar sort of thing, we're coming down to a low volume node here, went back up to the VPOC. As I say, the other aspect of support and resistance is very much these price-based levels. This is on the accumulation distribution indicator, these dashed lines, the blue and the red. Work slightly differently to MT4, MT5 support and resistance, but the principle is the same. On MT4, MT5, you have dashed lines and solid lines to indicate strength. So the stronger the level, then it will appear as a solid region. On the accumulation distribution on NinjaTrader, what it does is it presents them as thicker lines. So this one's a lightweight area, if you like, but then we have a much deeper area here because it's a thicker line. It's also got one overlaid on the top. So this is a 2 and a 7 here. And then you've got this one here, this blue level, also very strong. So from a trading perspective, once you move through these regions, certainly to the short side at any rate, once we breach this level, we've gone through the volume point of control, we're moving lower, it's all good news in terms of taking a short position. The trend monitor is confirming that as well. And as I said, the trend monitor was really developed to help to keep you in. Just go up onto the 1-minute here. You can see what I mean. We came down to the volume point of control. There was a relatively strong region of price-based, what was support at that point. We went through this with a little cluster here of 2. So we broke through that. So that was good news. Then we came down to this next region, stopped at that briefly. Then we went through. So again, we've now got 2 levels of protection in place in case of any reversal. We then break through another one. You also see we've gone through this low volume node here pretty quickly. We've also gone through this one pretty quickly because there was nothing there to cause the market to pause. Now we're starting to build into a congestion phase down here, so the volume is building. And if this volume continues to build, then what will happen is this volume point of control here will actually hop down to this level to show that at this point, we are now reaching a point where the market is in price agreement. There we go, it's actually happened in real time. So we're now building at another volume point of control because this volume has now exceeded the old volume up here. And we're now trading at a point where the bears and the bulls are in agreement. In other words, there's no strong bias of opinion either to the short side or the long side. But you can see on the trend monitor here, this is a classic, if you like, this is a classic color change. We went through the uptrend here, bright blue. Then the trend monitor starts to think, hang on a minute, I think we've got a bit of a change in trend coming on here. So we go dark blue. We go into congestion phase. It then thinks, well, actually, I think this is converting into a possible complete reversal from a primary bullish to primary bearish. So we go dark red. Then we come out the other side into bright red. But what you'll see in the pause points here is you go into a darker red. But what it's doing is it's basically saying to you, yeah, okay, I understand we've got a little bit of reversal going on, but sit tight, don't worry about it for the time being, because we're not seeing that develop into a full-blown reversal into the uptrend again, and on down we go. And that's just on one chart. And obviously you're looking at the volume profiles, you're looking at the VPOC, you're looking at support and resistance and everything else. But when you put it into context of the multiple time frames, and this is what I'm trying to convey here, is if you look at the 15-second chart, the trend monitor has actually developed into a little run higher. Now there will be traders who've taken that position. That's fine. I trade the 15-second chart myself on lots of different markets, so you're in and out of there all the time. And what you're seeing there is a microcosm of what I was trying to explain on the multiple currencies strength indicators, where you are seeing this constant pullback reversal within a very fast time frame, which to a slower time frame trader is of no consequence, but to a scalping trader is of consequence because they're quite happy to trade on those sorts of time horizons. And what you're seeing, and if this actually develops into a full-blown reversal, in other words, from coming down to going up again, then what you will see here is continuation of the trend monitor confirming that. The market will rise. You'll then move over onto the 1 minute. You're starting to see a possible change here on the trend monitor, which has gone to a darker color, purely because we're now in this congestion phase, but we're trading around the volume point of control, so it's to be expected. No great surprise there. And if you go up onto the 3 minute, not a flicker of a change on the trend monitor. You wouldn't expect to see it because it's too far away from the 15-second to be of consequence. And equally, the same is true down on the 5 minute and the 10 minute, and obviously right the way out to the daily, where the trend monitor there is very much still in bullish momentum. Because if you go onto the daily, if you were trading that on the daily time horizon, what's going on the 15-second, 5 minute, whatever, is really of very little interest to you. What is of major interest to you here is the fact that we've had a lot of failures at this region. We've got a double top here, which ended up with this the price crashing down here in September. And once again, we're coming up to test this level, which from a daily perspective would certainly be a key level for you holding this position. If you weren't in the market at the moment and you were looking at this as an opportunity to buy this particular pair on this time horizon, then what you would almost certainly be waiting for is you'd be looking at the weekly chart as well. But what you'd almost certainly be waiting for is a break and hold above this particular level, because you can see how it's reacted. This is very strong. This is, where are we, June? So this is the last 4 or 5 months. Gets to this level and fails, gets to this level and fails, fails again. So, is it going to fail again at this level? Now, if you're a reversal trader, you might well take the view that, that's looking to reverse and take the opposite position and go short. What's also interesting from a volume perspective, if you look at the volume here, the volume is actually falling away. So we've got a market that's rising on falling volume. Now, I've got the volume switched off here. It's not updating in real time because I've got so much data coming in on this machine and elsewhere. But you can switch that on and off to have it updating in real time. But it will be interesting to see what the volume is at the end of today if you were looking at, as I say, either an opportunity to take a long position once you break through this region, or to take a short position as a reversal. You've got a nice little platform of support in here underneath, so you've got some protection there anyway. But that's just an interesting chart. Sorry, it went off at a tangent there. But it just shows you how, and obviously that analysis of that chart that could be a 15-second chart. The principles that we teach, the principles that we trade on, they're identical. It doesn't matter whether you're a scalping trader on a 15-second chart or whether you're a longer term trend or swing trader on a much slower time frame. The principles and how the indicators work are identical.
On that note, could you just take a couple of questions?
Yeah. I will go on to the futures chart for you, Anna, and I haven't forgotten, don't worry. Yeah. Okay, let me answer. Right, okay, there's a fair few questions in here. Hold on. I'll just have to scan through them as quickly as I can. Right, okay, I combine CSI and RM4 on daily, and what I do is work it with camera levels, support and resistance, so that when it touches, I'm more of a swing trader. Fantastic. Thank you, Francisco. This is what it's all about. It's really finding, and it's what we focus on in the program. It's really to try and explain, and why we always say start with the psychology module, because that will help you understand your strengths, your weaknesses, who you are as a person, and therefore what is likely to suit you best. It also partly depends on the time available. We are very fortunate. We can sit in front of screens all day long. We are in a very, very fortunate position. We're also in a fortunate position because we're in the Northern Hemisphere, and therefore we have the best of everything. So we get, the markets that are traded most deeply. So we are very fortunate. But thank you for that. It's much appreciated. And it is what it's about. This business is finding what suits you and your trading style. And it's one reason why people say to us, well, you know, what would you do? They say, well, here's a chart, you know, what would you do? It's irrelevant what Anna and I would do because we're completely different. We are not the same personality as you might be. It's critical to know how many candles does a VPOC go back on any time frame. You can adjust the look back period on any of the indicators, and you can certainly play around with that. You know, that's an option within, I think, pretty much all the indicators. You can change the look back periods, you can change all sorts of things on the trend monitor, for example, on the trends. You can adjust the sensitivity, so if you want to smooth that out a little bit further, you can. There's all sorts of things that you can do, and you'll find that all on the support pages for the indicators. Does the data for your indicators come from your broker feed? It does. It comes straight off the broker feed, whichever broker you. This is on Ninja, so here I'm using the kinetic data feed, which is the one that Ninja Trade themselves recommend. It's a fantastic feed, worked brilliantly with all the indicators. It's fully supported by us, and you get all the live tick charts and all the rest of it. So yes, it will. But whether you're on MT4, MT5, that will deliver the data feed that drives the indicators.
Sorry, just come over for 1 second.
I'm just going to pass back to Anna. You can see how this trade is still developing. You know, pound's still falling nicely, and the Aussie is still rising nicely. And you know, it's all about, and this is what it's about. It's about sitting in this trade through these little pullback positions, not getting frightened out of the market, and that's what the trend monitor does, amongst other things. Going to pass back to Anna.
I just want to show you what this price action looks like on MT5. I just happen to use MT5, but you would see it on MT4 as well. A couple of things. When I mentioned about the cross, you can set alerts up on the CSI for such an event, and in fact I tend to have alerts on the 10-minute charts for the pairs that I like to trade and like to look at, and pound Aussie just happens to be one of them, and this is on the 10-minute, so that has told me that it was coming up to a cross, but I could see visually by eye, this is what I was looking at, this cross here that I was waiting for, and it was around, as I said here, the R3 of Camarilla. And the configuration I have here, as David said about, you know, staying in a trade, holding that position, and this is where something like the Renko chart will certainly help you. It helps you to get in. And again, it comes down to how aggressive you feel you want to be with your entries, how perhaps you want to be a little bit more conservative. And I said there is this spectrum you know, that we move along. And even if you consider yourself an aggressive type trader, sometimes, you know, you may look at things and you think, you know what, I'm going to hold back a little bit. And then what you tailor, how you tailor your you know, the entry into it is perhaps you go in with a smaller size. You don't you work the amount of money that you're going to put into the market according to your risk appetite, but also what you think, how risky the trade is. And you know, it is this combination of factors that, you know, will determine when you get in and by how much. Is, you know, this is a very discretionary business, in the sense that there are no hard and fast rules. There isn't a rule that says when you see ABC you will do this. Every situation is different. The patterns repeat, don't get me wrong, patterns repeat, price action repeats, anomalies will appear on your chart the same as appeared before, but the context will be different. The context will be different. The price may be moving at a different speed. You know, this is not some metronomic activity that, you know, moves at a steady speed. We can see here, the nice thing about the Renko is because it's just looking at price action, it is also picking up momentum. And we know that because this is actually, each one of these bricks is set to 3 pips. Now, when those 3 pips are moving fast through the markets, these little bricks will come out one after the other. But when they, you know, when they're not coming out very fast, they slow down. You know that the price is pausing. It hasn't changed necessarily. It's just in a pause point and it is waiting. And if you look at the 3-minute chart here, as I said, this was the move lower. it stopped at the VPOC. It tends to do that. It tends to have a little retest, deciding what it's going to do, particularly around the session, you know, that when the new session's opens. And London is a classic one. A lot of traps set. You know, maybe traders have, you know, seen that come down. Oh, great, I'll go short as well. Bang, you know, it goes back and retests the VPOC, goes into a congestion. You know, maybe stops have been taken out, and then it carries on. If we take that as the primary trend lower, you know, the pullbacks are the secondary trends, secondary moves, and we have to decide whether those secondaries are that's what they are, simply a pullback, or are they the start of a major reversal. Now, moving up to the 10-minute, again, the Camarilla will give you these little alerts up here. They will sort of say a possible short on the horizon. You can turn those off. They're quite interesting. They are pretty accurate. It's around the R3. Sometimes, you know, if it's trading above the R3, you will sometimes it'll say a potential long, because it, you know, it does reverse from there, but you don't go off one signal. You watch and see what is happening with the candles, the price action, the patterns. If you've got the indicators, what the indicators are telling you. You look at the renko. Is there some momentum behind this move? Well, certainly, you know, it looks like it is going to go lower. And then the next question is, well, you know, where's it going to? It's awfully, you know, you've got in, we've stayed in. Well, you know, where's it heading? And this is where your support and resistance comes in. You look at the candles. You look at candles with wicks to the bottom, because obviously there's buying coming in. There's buying support. There's stopping volume coming in. We're cutting down to, as I said, the R3 here. May get another little pause, and you just work your way down the levels. And where are we here? We've got the 3-minute chart here. We've come to, as I said, this is the little bit of buying coming in, but you put everything together, and you know, it will give you a complete picture. As I said, what's happening on what often happens also when you get a little bit of a push down and a bit of momentum coming into something, you do get a reaction and almost a kickback, as it were. So right, it's moved fast, right, that's and sort of buying comes in, and if it's to the upside and it moves fast, it's suddenly, you get this stop start all the time with a price action. But as David said, when it starts to fall, it tends to fall much, much faster than it goes up. So at the moment, there's nothing in here that tells us that this is due for certainly a major reversal. Yes, we've had pause points. Yes, we've had buying coming in, as we can see here on the 3-minute chart. We've hit this level here, which is 83.52, and you know, you think, well, okay. We just have to go to the slower and slower time frames to find some, what I call significant levels. Well, we've got a Camarilla level here. We can see some buying coming in. You know, and if there wasn't anything here on the 10-minute with Camarilla, by the way, the value of the levels up to the hour, but not including the hour, are different. So we look at the to the hourly charts. They will give us, these levels are valid until the end of the week. So in fact, what I said about the R3, because it's trading above it, what does it tell us? Possible breakout to the long position. So you're getting two contradictory messages, but that is what you will see on different time frame charts. You know, you will see one picture, one context on one chart, which may be completely the opposite of what you see on another, and leads us to another lesson, and that is you really have to be pretty clear on the time frames that you are going to watch, because it's very tempting. You know, you get into a position on one time frame, it goes against you, and you think, do you know what? And you go up to different time frames, but actually, I was actually right on that one. You know, that's not. You can get yourself into all sorts of problems with that. But as I said, the message you're getting on the hourly chart is completely contra to what we have seen on the 10-minute chart. But I did say with the R3, when it's trading, in this case above it, it will see it is a point something to do with this protocol, I don't know, don't ask me to explain why. It can be the point for a nice reversal. If this is going to carry on lower and that breaks through and starts trading below it, then obviously that message will go. Interestingly, on the lines of the CSI, the pound is kind of turning down, but it's kind of moving sideways. So we could get a bit of congestion. We will just have to wait and see. Let's go back to the 3 minutes. It's still going straight to rise, still going down nicely, but obviously 83.52 is quite a key level. And on the renko, that's what the support line that's been created by the price action that we've seen on the time chart, and clearly it's got to, if it's going to carry on lower, it's got to break lower. So there we are, just looking at the pound Aussie on the MT, this is actually on MT5. Right, I think you're going to do some, fine, okay, let me pass over to David because he wants to have a look at the futures.
Anand, you've been very patient, apologies. I've moved this across over to the futures workspace. I've got the 6A, which is Aussie dollar, I've got the 6B, which is cable pound dollar, the 6C, which is dollar CAD inverted, so it's CAD dollar, because on futures, I'm sure you know, everything is quoted against the dollar. So it is the inverse. So when the dollar is being sold, which it is at the moment, you can see it's curled over. This is on 5, I think again, yeah, 5 minute. It also shows you using the CSI for whether you're trading spot or futures, using exactly the same way. So the dollar is starting to sell off quite strongly, as indeed is the yen. New Zealand is rising quite strongly. The pound, you can see, is starting to flatten off a little bit. The buying in the Aussie that we saw is still continuing though. But in terms of dollar, because this is really a view on the dollar, if you will. So we've got Aussie dollar, pound dollar, CAD dollar. So in other words, they will all move in the same direction, which is great when you're looking at the futures market. It also gives you, as I said earlier on, the opportunity, if you want to short something, if you can't short it in spot, you may be able to find it in futures. You've then got euro dollar down here as well. We've got the dollar yen here, and the dollar yen does not move in the way you would expect it to move. We spend a great deal of time explaining in the forex program about why that is, because a lot of traders seem to assume that the dollar yen trades, if, for example, with yen sentiment, will move in the same direction. It won't. It moves in its own orbit. It is a unique currency pair, and it is one of the trickiest pairs to trade. Almost the trickiest, I would say. And then down at the bottom right here, we've got, so that is, that's not dollar yen, that's yen dollar again. So that's why the data down here is looks a little bit strange, but trust me, that's what it is. And this is New Zealand dollar. You can see the strength of buying in the New Zealand here, very strong. In terms of where that's going to, well, it's certainly going to get up to, let's just pop that up full size, make it a bit easier on the eye. There we are, pull that out. Where is that going to? Well, you know, it comes back to this whole business of resistance areas. Where is this trade going to take me? Have I got some decent clear water between where I'm getting in and where I think it may struggle? And in terms of New Zealand dollar, you can certainly expect it to struggle at this level because you've got the volume point of control there. So in terms of how much further it's going to go, probably not a great deal of distance before it starts to move into a range-bound area. You've then got some pretty strong price-based resistance coming into play with all these various levels stacked up here. If it manages to break above this region, then fine, you've got low volume, but then you've got another big wedge of resistance overhead here, which you can see how strong it was here. So, you know, there's several reasons there, perhaps not to take that particular trade at the moment. But in terms of others, you can see the dollar is selling off strongly. And that's why we're seeing this, we saw this reversal. This is on cable, on futures, 8 o'clock, exactly the same principles. This is 8 o'clock, this is 7 o'clock. So we've got the European volume in here, which we can compare. And we're now looking at the UK, London Open, and all the volume in here we can compare. And what's interesting about this particular move, as we get into London, we get a volatility trigger. We're still trading pretty much around that range, but what's also interesting is the volume on that heavy selling was falling away. So we had an initial heavy volume to start with, volatility trigger right down here, but then the volume itself is falling away, and it falls away further here. So what is that telling you? What it's telling you is that the selling pressure is reducing, it's falling away. In other words, the sell side is not as strong as it was, certainly at the open, and is now diminishing. And what you want to see in terms of this particular rally is obviously volume rising to support it. But again, as with the previous chart, New Zealand dollar, same problem. If you were going to take this as a long position, where is it going to go? We're almost certainly going to hit this level here. It's going to stop there, certainly for a period of time. And above it, you've got some very strong levels above here. Also, decent one there. You've got a cluster of 3 here. You've got all sorts of reasons that the market is going to suggest that. Not least of all, bear in mind, if you're trading pound, you've got to deal with Brexit and all that entails. Just have a look at Aussie dollar, see what that is. This is probably a better proposition. Why? Because first of all, we've broken away from the volume point of control. The trend monitor's transitioned through the blue, you can see, which is great. We've also managed to get through this very solid level here at 70.46. And that break was also supported on very good volume, very little wick to the upper body. So, you know, tiny bit of selling in there, but nothing really too much to worry about. So nice volume and price there, volume, price and agreement, all good stuff. And as we move higher, well, we've got some price-based resistance ahead for sure, but it's not huge. And then we've got this very nice area of low volume on the chart. So all things, just move that chat box out of the way. All things being equal, you know, it should go through there pretty swiftly. And also below us now, we've got a very nice platform here, which will act as a platform and also hopefully act as a support area should the market reverse. If we had a position here, you know, we've got a stop loss somewhere down here. Then, you know, if the market reverses against us, at least we've got some protection in place, some technical protection to hopefully halt any reversal or pullback as the trend starts to develop. But in terms of where that is at the moment, you can see the Aussie here on 5 is right up into overbought at the moment. So, you know, again, you'd have to ask yourself, well, you know, how much further has this got to go? Because the Aussie is up here. Then you'd be looking at the much slower time frames of 10 and 15 and so on and so forth. And so on you go. And that's really just the way it is. So, you know, this could be any chart. This happens to be a futures chart, but it could be a spot chart, could be anything. Really, what the chart is for is almost academic, other than obviously understanding the futures contract you're trading or the spot market you're trading, whatever it is. Other than that, everything else is the same. It's volume price analysis, it's the indicators, it's multiple time frames, and so on and so forth. You can see what's developing here. This is on CAD dollar, so the CAD's rising. Nice move here. We've got volume rising, which is good. We've broken through a pretty strong area of cluster here of 2 on resistance. We're now moving out. We've got a very limited level here, which is, you know, minor, and we've got low volume developing up here. So from a perspective of, you know, whether that trade is going to develop further, certainly looks as though it will. You know, it might be one to consider for the shorter term. And that's it. And really, you know, that's where we are. And I just wanted to show you over on, Anna was talking about the renko. Let's go to the multiple renkos, because this is just a powerful application of time and non-time based charts. And I've got 3 here. Below, I've got got some volatility coming in. Could be something to do with Brexit. Who knows? It's precisely my point. You know, you've got to be aware of the fact that if you're trading pound, then you've got to have a decent news feed, and that may well be something to do with Brexit. But what it tells you is you've got a volatility trigger. You know, expect some congestion. We've gone into the volume point of control here, but it's a blend of time. We've got 15 second, 30 second, and the 1 minute down here, and up at the top I've got the equivalent. So in terms of the brick size, what the Renko optimizer does, it delivers the optimal brick size. So if I flick this down, we'll just take a quick look. This is on 15 second. That was on 19. In other words, that was 1.9 pips. And that has now changed. That has now gone to 2.7. So the brick size has actually increased. So we've gone to 2.7 pips now. This will also probably increase. I won't do them all. And across out to the slowest time frame on our 1 minute. But it's a powerful way to blend time-based charts with non-time-based charts, because it gives you the best of both worlds. You've got the volume price analysis methodology below. You've obviously got all the indicators there as well. You've got the volatility trigger, which gives you all the information, the volume point of control, and then up at the top here, you've got charts which reveal momentum, because the bricks will be built at different time frames, because the only metric that is governing when this brick will be built is this here, which is 2.7 pips. So as soon as 2.7 pips up or down have gone through, the brick closes and moves on. It's as simple as that. Whereas on a time-based chart, this has to close after 15 seconds. That's the only metric that governs it. What governs this is that, which is not dependent on time, and therefore on a renko chart you see momentum. You don't see it on a time-based chart. What you see on time-based charts is volatility and a lot of oscillations, but what you see on renko is the actual development of that price action. You can think of it, if you like, of actually deconstructing the candle, a time-based candle, into the various component elements and printing that on a chart. And that's pretty much what the renko does. It gives you this inside view of the price action and gives you the trends and develops the trends which you don't see within the candle on a time-based chart. So it's a powerful application of both a time and non-time-based chart. And using this way, use 3. It's very powerful, I can assure you. It's one of my go-to workspaces all the time. I've got it over on the trading systems behind me. So I just wanted to highlight that one for you. Let me just see if there are any more questions before we wrap up. I think we've done. Yeah, I think all done. There we go. So, hope you enjoyed this session. Let's just very quickly go over onto where you can find all the bits and pieces. This is where you'll find AnnaCoulling.com. You'll find all the books up there on Amazon. They're in both Kindle and in paperback. You'll find them all there. In terms of the indicators, you'll find them at quantumtrading.com. MT45, NinjaTrader 7.8, also TradingView. I've got TradingView running. I haven't pulled that across today, but I'm just keeping an eye on the VIX. That's tracking down at the moment, but still pretty high at 28.7. And TradeStation is coming, I can assure you. It's been a long time, and it's been a huge amount of work for us, but we are getting there, I can assure you, and hopefully get those launched by the end of this month with a fair wind. So that's what's going on. We are working, once we've launched TradeStation, we will be dropping back onto TradingView. We will be porting all the indicators that are missing from that particular package there, because we now have the opportunity to develop them for TradingView. So you will find the currency matrix, the currency array, the currency heat map, the VPOT will be there, support and resistance. They'll all be there within the package. So if you've invested in the full package for TradingView, good for you, because you'll be getting all those free of charge, because I can assure you once they are there, the package will be aligned in terms of price with MT45 at $894 rather than 600 and whatever it is. Can't remember off the top of my head, but it's around $600 or so. So if you've invested that in the past, you'll get them as a free upgrade. If you buy it within the next few weeks, you'll also get them as a free upgrade thereafter that will move to the same price. Once we've done that, there's a whole bunch of things we're doing. There's some new indicators in the pipeline. We'll also be focusing on TradeStation. We're on stocks on that. We're looking at order flow. We've also got, we will be also porting over to multi-charts next year, being the next platform we're working on, and lots more to come besides. In terms of the Forex education program, you can find it here at quantumtradingeducation.com. It is the complete Forex trading program because it covers everything you need to trade to understand, to trade these markets with total confidence. And of course, it includes the full suite of indicators. If you've partially invested in the software and you're wondering whether to upgrade or not, we give you a full credit for whatever you've bought. So if you've bought some indicators in the past and are thinking of joining the program, we give you a full credit on the upgrade. These are the core modules: psychology, fundamental, relational, technical, and mechanics of trading module. And then there's a whole raft below: VPA chart examples, how to use indicators, pulling it all together, topic webinars, webinar library, and resources. There's around 250 hours of video in there. There are over 440 odd lessons, I think, individual lessons. It's comprehensive would be an understatement, but when you come out the other end of it, you will have complete and total confidence and a total understanding of how to trade the FX market with complete confidence. That's it, we're done. Hope you've enjoyed today. Thank you so much for coming along. We have to run. We will be back same time next week, 7:45 London time. And if you're going to join us later, it's 3 o'clock for the US market session. So enjoy the rest of the trading day. Stay safe and well. We will see you later, or we will see you next week. Thanks so much, and see you soon, and bye for now.